welcome to the closing beat, everybody. Happy Thursday to you. How you doing out there? Good. Glad to hear it. We are financial advisors here at Jazz Wealth, and we got a fun one coming up tomorrow. We actually did a little bit of a trivia night here with all of us. So we played some games, and that's going to go up in two parts. One will be on Haley's channel, the Doe Straight channel. If you want to learn about quick, simple financial tips and also see part of this trivia, check out her channel there. And the second will go up tomorrow evening on our channel, so you can see round 2 of our little trivia night. And actually, I made a mistake. So one of the questions was, what is the largest denomination bill that we have? Can't even see it, right? It's $100 trillion. This is a $100 trillion bill that was sent to us by one of our clients from the Bank of Zimbabwe. How much do you think the conversion is for $100 trillion into US dollars? Go ahead, take a guess. Let me know what you think there. In the meantime, we have officially been ranked the 66th best advisor in all of the United States by USA Today. Not by us, because I'd have picked a different number, a little more immature than 66. I'm just saying. Threw that out there. And tonight we've got our Wine and Wealth class. So this one will be a quick one here today, because tonight we're doing our May financial focus for clients, what you need to focus on. We've been breaking up different things to do over the year, so it's not so crazy to do it all in one shot. And we're also going to talk about the sell in May and go away until Labor Day phrase with all of the geeky data. You know, it's coming with the data there. That's what I do. Anyways, let's talk about the S&P here today. Back and forth. We're in the transition period, right? We talked about this yesterday, and it's holding true today. We're going to have some big up days, some big down days. All of that stays true. If you look over here, you know that it's part of a process. The stock market does not go in one direction, then break that direction and magically just turn around and go higher. It's not common anyways. I got a little carried away last night. I did find some scenarios where that did happen. However, they were coming out of catastrophic declines, right? That sort of V-shaped bottom that gave it that momentum. So, you know, this is not that time. This is just a simple pullback at the moment. And if you look across the board, really at any index you want to look at, it's the same thing. It's an earnings, well, for the moment, an earnings-driven back and forth, and remains to be seen what happens from here. Fun fact. You guys want a fun fact? I thought this was pretty cool. Remember yesterday, so check this out. And I don't like going back in time. I like to think forward, but we're going to do this just one time. Hang with me. It's interesting, I promise. What happened yesterday? The Fed comes out, says, no, we probably won't be hiking rates next time. They were talking more about cutting rates. In fact, Mr. Powell, after going back and watching this, he went to great lengths to not take the bait on some of these reporters' questions about what the next move would be. He's focused on, hey, we'll cut rates when we see good stuff. Anyways, the market takes off, goes up 1%, over 1%, and then falls, right, in the last hour to give it all back. Is that odd? Turns out it's extremely odd. Fun fact for you, if the stock market is up more than 1% by the last hour of the day, so if you're on the East Coast, that'd be 3 p.m., then in that last hour, there is a 1.1% chance that it will give back all those gains and finish negative. In other words, basically 99% of the time, if the stock market's up 1% as you get into the last hour, it will not turn around and erase all those gains. So that was, in fact, really, really odd there. There's only 12 times in history where that has happened. So I thought, what are you going to do with that? I don't know. You know, I just thought it was an interesting stat there. Also, I'd like to point out, if I go back to the S&P, the last 10 minutes of yesterday and the day before did exactly the same thing. If you just look at it, the last 10 minutes of yesterday and the day before fell 0.6% perfectly. Like, incredible in just the last 10 minutes. So a little bit of a theme happening there. I'm not sure that matters. It didn't happen today, but I just thought it was fun. You know, the fun stuff. All right, looking over at the NASDAQ, you're going to have the exact same thing going on over there. The NASDAQ efforts, the excitement was really in the growth area, large cap growth. So the big names you're all familiar with. And I like to point that out. Not that everywhere else did bad, it's just that was the standout. And by the way, if you look at the Russell 2000, once again, the small cap value stocks are outperforming. So they're just getting that attention. Now this, by the way, this doesn't happen normally. So you ever see on TV where they go, I'm a value investor. There's some great value investors. I'm a growth investor. And then they debate it, like what's better, growth or value. You can chop up different times and periods. to make it look like, and this would be one of them, to make it look like value investing beats growth investing, but unfortunately it doesn't over the long run. So maybe don't fall for that as much. I don't know. It's just it's a numbers game. All right, looking over at gold, right? So gold pulling back after a pretty sharp little rally. Remember, gold goes in fits and starts. It's not my opinion. It's just how it works. Bam, take a break. Bam, take a break, whether it's upside or downside. So that's continuing there. Bonds, I don't have anything interesting to say there. We're remaining at high levels, or prices remain at lower levels. Whether it's a short term or the long bond there, not much going on, so we won't spend much time there. Crude oil continuing to digest the surplus that we had yesterday. And I don't know. There was some other news and some manipulation and stuff, but didn't really affect oil prices here today. And that's basically looking around. You might point out Bitcoin for those of you that like that, right? Trying a little something there. I don't pay much attention to Bitcoin, but that is what you have, all right? We're going to go over some stocks in the news here, and then I will take your questions. We'll go over a few other things. There are still just a couple earnings for tomorrow. Friday's not known for being exciting earnings-wise, but there are a lot of names to report. And I guess we'll start with Apple because that looks like they reported after hours. What do you think the excitement was? I'll lead you into it. Hold on. Let's do it like this. All right. We're going to try it just like this. We'll do a little bit something different. We're going to say Regeneron, right? Not as interesting of a stock to look at as Apple, but watch. Regeneron has their earnings come out. This is a miss. Nothing good to say. Nothing that they were expecting in terms of Wall Street there. They missed on earnings, missed on total sales, lowered their guidance going forward, and they even said, hey, we're not even going to spend as much going forward. We're not going to try to grow the company. We're just not going to spend money. You know what we're going to do? We're going to buy back $3 billion worth of our shares. And stock went up, right? Those of you who've been watching for a while, I'm having fun with that. All right, let's go over to Apple. I haven't even gotten to all their earnings yet, but what happened? The stock is up so much. $110 billion share buyback. I don't know if you know, but that's a lot of money. The stock's trading 185, 186. That'd put it right in here as far as the gap up tomorrow if you're looking for that. So that's going to impact the NASDAQ tomorrow and the S&P, of course, because that's a bigger weighting on that. You probably see the futures markets be a little bit supported here tonight. And there you go. Gave you the answer. DoorDash. This is a really easy one to break down. If you're a DoorDash fan or you're thinking about buying this pullback or something, it was an impressive beat, right? So most metrics were outpacing what the smartest analysts had believed there. 20% growth rate year over year. Obviously, that's a good thing. The trouble is when it's kind of like what Amazon did. They traded off their growth for profitability. Right? I'm willing to grow more and I'll make more profit later, but for the moment, I'm going to just dial that back a little bit. Well, it's not a bad thing. It's just you can't ask the market to pay a higher valuation or a higher price for your stock if you're saying, I know we will have less profits going forward. So that's what happened there. Speaking of losses, Wayfair. I think these guys are pricey, to be honest, but Wayfair lost less than expected, like $100 million less than expected there. And total order sizes, you go and you buy furniture and you throw a pillow in there as well. The order size was bigger per person as well. Retail stocks are a little bit simple to digest in that way because we're looking at, like we did Starbucks yesterday, we're looking at the number of tickets or the number of transactions, and we're looking at the size of those transactions. That's the same thing that happened with Wayfair there. Not too bad of news for them. Cigna, overall, much better than CVS. Remember yesterday we talked about CVS bringing in money for their healthcare premiums and then spending 90.7%, I think it was 90.7 or 90.3% of that money out in costs, right? Meaning people use the product a little bit more. Well, Cigna was a little bit different. Cigna they paid out 79.9% of what they brought in, which was below what everybody else was expecting. I think 80.7 or 81.7 was the expectations there. I did not get into the rest of it to figure out what may have been going wrong there because Carvana, blast off, right? Carvana's turning the corner, man. Remember, these guys got really beaten up after COVID there because there was this big swell of things, and all of a sudden, no, cars are too expensive. I don't want to buy them. Car sales up 16% year over year. It is the first time in 6 quarters that they have seen, auto sales grow, right? Growth in sales. It's the first time in 6 quarters. So if you look at that stock today, I think it was like the largest gaining stock out there. No, you know, it might have been MicroStrategy. No, it was Carvana. Oh, that was points. I'm looking at points. Okay. Well, yeah. So one of the bigger movers here today. That's something you care about or have been waiting to take a look at. Lastly, we've got, well, I mean, there's a lot of them. I don't know what to tell you. There's so much you can go through. MGM did sell off at the end of the day. Still a decent gain there, 2.8% there. That was a beat across the board, but really thanks to Macau. And then everybody started asking about, hey, what about Vegas? Nobody going there? And they say, hey, Vegas is going to improve. What does that mean, right? They were a little bit bland on the specifics there. All right, I'll take your questions if you have any questions. Otherwise, I'm going to get ready for Wine and Wealth here tonight. There was a ton of earnings. I mean, we could spend the whole time just going through earnings. At least, 35 names here. So a lot to talk about well, we're not going to talk about it. And so tomorrow you've got CBRE and Hershey, kind of a fun one there, and a handful of REITs. So if you like the REIT space, remember that has not been, it's not been the most exciting area to look. So if you like the idea of in fact, let me see, still in last place. So the real estate sector is still down 7.6%, and by far in last place. The next sector that is the weakest is only down 1%. It's consumer discretionary. If you want to use an ETF, that would be XLY. So it gives you an idea of just how bad they're getting beaten up there. Well, you get to hear more from them from CBRE, and let me just make sure. Was it? No. Who was it? Somebody's reporting. I can't remember who it was. I don't have it on my list, but it's going to be a bit of a REIT day there tomorrow, if you're curious. Do we have a leaderboard?
We do.
Oh, we do have a leaderboard. What you got?
Yeah, we got Eilish, Lori, Gabriel, Kevin, and Megan. We have 3 out of 5 of those are clients on our leaderboard today. So we.
Oh, yeah, I see what's happening there.
What do you see?
Charlie's playing for Eilish. There's nothing wrong with that. You want to put your spouse in there as well? That's cool. But
you don't know that to be true.
Yeah. I know who that is. Charlie's playing for Eilish. That's okay. If you want to play Guess the Dow and you want to throw your spouse name in there as well, the only thing it won't do is accept the same name, again for another guess. But if you have a spouse, both of them are clients, so of course I'm cheering. Different emails, yeah. All right. Let's see what you're up to, Charlie. I got it. All right, let's take your questions if you have any questions there. Dividends and buybacks. I should have said 110 billion. Yeah, I like that. So this here, is it 40 cents now? When I looked at it, when we first got it, it was like 68 cents. Isn't that fascinating? 100, I don't know if you can, it literally says $100 trillion we're holding in our hands. And it's not even worth $1 in US dollars. Crazy, right? Give our inflation time. Maybe we will one day have $100 trillion. Yeah. So, yeah, I'll go with that. If it's 40 cents, that is very, very close because it was 68 when I looked. So, fortunately, got a little bit weaker against the old dollar there. Yeah. Hey, thoughts on Starbucks? You had bad timing starting to create a position. What does that mean then? Thoughts on, what do you do with that? I'm not sure. Are you saying oh my God, now I'm stuck. Bad timing, maybe you started in the 80s or something, and now it's 74. I don't know how to answer that one. I would not expect for this to just come rallying back. So if you own it and you've chosen that after this, I'm not willing to take the loss, I'm going to hold it, I think you're going to be holding it for a little bit. There's always a good chance. Starbucks is not the best at it. See how far can I zoom out? I can't zoom out, but when there's a big down move, see how there's an attempt at a rally. So you get these couple days where you think, oh, we're good to go. But then, unfortunately, I think you're going to watch it move sideways a little bit. Yeah. You know what's funny about this thing, though? If 100 trillion, if it's really, is there a $200 trillion bill? What comes after a trillion? A zillion? Quadrillion. I mean, because you're right. It's not really all that impressive. I might find it interesting, but what do they do for something like a car? How many trillions is that? Pfizer finally broke the 2-year downtrend there. Finally trying to get something done. It's teased this before. If you're going to be a pure technical, person here. It's teased it before. I'll give you this, though. At least there's some volume there, right? There's the past couple days, there's been people going, I'll cover shorts. I'll decide to maybe add to a position, buy more, whatever it is. I don't know, because I know I've seen this tease before, and I've thought the same thing. Like, here we go, we're up and running, and no. So, Isaac says, not sure what to do with Starbucks. Not even earnings reaction. The earnings were terrible, and they were terrible. And unfortunately, I thought management could have addressed it with different words. If it were me in the same position, I would have said, we realize that there's something we need to be changing here. We're working hard at it. We're going to think about it. But instead, they just said, this doesn't reflect the power of our brand. Like, they were insulted that people would buy less Starbucks. The way it came across was like, oh, no, don't say that. Stop. That's not nice. Anyways, speaking of not nice, if you see our little trivia game that we played, it got a little competitive around here. So you get to see Chris saying some not so nice things about me and us all jabbing at each other while we try to win the trivia game. You will see that tomorrow. For those the rest of you here at Jazz, if you're a client of Jazz Wealth, Wine and Wealth tonight, we're going to hang out right here. And we'll be going over May Financial Focus, as well as Sell in May and Go Away, all the cool little stats and fun things that will help just let you go. I'm not, if I read that article and they tell me to really do it, what do we got? If they tell me to stick it out, is that true, right? If I should be selling in May but then coming back earlier, is that true? We're going to go through all of it tonight, as well as more. So you guys enjoy the rest of your evening there, and thanks for supporting us. I'll see you in a little bit. Wine and Wealth.